Good day, traders. The 4-step method to high performance trading is a free course download for increasing your competence in your ability to execute your trading edge in live time. The link for the download is in the description box below. And the free audio program, the 7-step daily routine for high performance traders, is also a free download to develop your discipline, your confidence, and a winning mindset to master the markets. Again, the download for these links is in the description box. They're both free downloads. Let's get started.
G'day traders, Stacey Burke from Stacey Burke Trading, and today a short video on day 3 trading opportunities, mastering the day count. I'm going to go over some really basic things today, again reinforcing just hunting out day 3 trading opportunities, regardless of which session you are trading in. And we'll be explaining some of that today, finding day 3 in the sessions that you're trading on any instrument. And sometimes you're going to be focusing on a basket that reflects the potential movement in the session that you're trading. For example, Asian pairs in the Asian sessions, Europe pairs in the London Europe session, or New York indexes, oil, gold, and other major currency pairs in the US session. So talking about templates and talking about keeping things simple, we're going to really hammer home simplicity, reproduction of a simple process that helps you identify a day 3 instrument that will offer a day 3 trading opportunity in that session. Sometimes it's going to be for a session parabolic. Sometimes it's going to be for a 3-day parabolic opportunity. Monday to Wednesday, day 1, day 2, day 3. Wednesday to Friday, day 1, day 2, day 3. Now, we've talked about Monday being the opening range of the week. Wednesday is the midpoint range of the week. As we head into the close of the week, Wednesday to Friday, Wednesday, midpoint range of the week, Friday is the closing range of the week. This can have an effect heading into our new week for a potential day 3 on a Monday, a day 3 on a Tuesday, because of how the week closed out. So we can get day 1, day 2, day 3 opportunities. And that's what leads into a 3-day setup. A 3-day setup will come when there's a peak formation, high or low of a week, or a continuation from a peak formation, low or high, where another daily level is broken on the next day. That gives us a day 1, day 2, setting up for a potential day 3 trade, which can coincide maybe on a Thursday or a Friday or a Tuesday. And then we have 3 days of breakouts. So regardless of what opportunity we have or what we can identify, the Monday to Wednesday, Wednesday to Friday is always there. And those are templates that you can hunt out on any instrument. While at the same time, there may be an instrument that is in a day 3 setup, as we saw on the euro today on a Monday. And we saw that on the Aussie dollar as well. We'll talk about that. So if you're trading Asia, Aussie, New Zealand, yen and their crosses may offer an opportunity on any one of those days, because a different instrument may offer the trade setup. That time for me in North America is 8 to 11 p.m. New York time. Now, because we have 8 different Asian markets opening slightly staggered over that 3-hour window, we can see movement on a day 3 occur in that first hour. Sometimes we'll see it in that middle hour, and sometimes we'll see it later in that third hour, depending if there's major red news on the calendar for any one of those pairs. Same thing applies for London, the Europe-London window. Euro, pound, and Swiss crosses, and their crosses, whether they're U.S. crosses or another cross rate, may offer a best trade candidate once or twice a week in that London session on one of those on a day 3. Just a 3-day setup again, or a Wednesday or a Friday parabolic opportunity. That middle hour being the London equity market opening time. Then, of course, we have our New York U.S. indexes, oil, gold. Coming back to London or Asia, if you want to trade an Asia index, the Nikkei, the Hang Seng, whatever that is in Asia, you may, again, be able to identify a fantastic opportunity by having a little basket that reflects the movement in one of those markets, perhaps the FTSE. For me specifically, the U.S. indexes, they open at 9:30 a.m. Now, there are rare instances where we can see movement in that first hour at the high or low of a week on perhaps a day 3, a Friday, a huge reversal opportunity that may start in that first hour. This happens occasionally, but there are specific templates where we have big pump and dump or dump and pump opportunities from the high or low of the week or month. Now, just to reinforce, I am only looking at levels, whether they are from a previous day or from 2 days previous. We can have a weekly closing price that is significant major support or resistance. We can have a closing price from a Thursday, as we saw today on the S&P, a failed breakout on Friday, where the closing price from Thursday becomes a potential area for major support. But the high of day from the previous day, the low of day from the previous day, and the closing price levels are fixed levels coming into the next day's trading range. These are the only areas I am looking to take trades from, whether they are reversals or trend trades. Now, this comes back to understanding finding a day 3 opportunity, or if you are just looking for a session trade and you have a 3-session setup that reflects a best trading template candidate. But understand, I am not looking at zigzags and price action all over and marking highs and lows and levels. Until it gets to these levels, I am not looking to trade that instrument. If I am in a trade, it is already in a parabolic opportunity heading to another level, from a level to a level. So reinforcing, day 3, 1 push, 2 push, 3 push. Day 3 can blow off in the direction of the trend. We will often see this on the front side of a market that is still front side, meaning that it is not broken structure. It is still in a trending mode. We can see reversal trades when we are typically in a dump and pump template or a pump and dump template, high or low of the week or month. We're about to start a brand new month heading into November. We can see reversal trades on longer time frames now start to break out or set up, because now a new timing cycle begins. We can see a new larger time frame template kick in, or we can see a continuation of an existing template. So day 3 can blow off in the direction of the trend, or we can see reversals, whether those are session trades. We saw one on the Japanese yen today, a day 3 that continued the longer time frame template trend, but it was a reversal on a daily session template, 3-session template. We'll look at that specifically today, as it was a day 3. So 3 days, 3 sessions. Think about that. So if you're trading in the Asian session, an Asian pair, day 1, day 2, day 3 in Asia for the Aussie dollar, for example, or perhaps the New Zealand dollar. We'll look at some specific examples of that. Or perhaps London, day 1, day 2, day 3. The euro, a day 3 trade from the low of the day today after first green day. So 3-day templates, 3-session templates. They will be in a pump and dump on our smaller time frame, or even on the larger template, or a dump and pump type of opportunity. There is nothing new under the sun. Nothing will change, but it's the levels, the timings, and the behavior of price in the template and how it behaves when it gets to the levels. Now, today was a day 3 on the Japanese yen. This is a 1-hour chart, and I'm going to just repeat the same understandings. We have a day 1 at the high of the week that is a failed breakout once Friday breaks the low of the day. So Friday breaks out of the low of the day. That confirms that Thursday was day 1. Friday is day 2. Now we're going to look at some simple things with the day 0 concept. Go back to your playbooks and study that. So remember 90-10 opportunities from the playbook, pump and dumps, dump and pumps. The high and low of the day, the opening range and initial balance, but then the 3-day setups, 3-session setups. Day 3 longs in the market, first red day, first green day, inside days. The day 0 parabolic opportunity can occur over 3 days. It can occur over 3 sessions and be a daily template. But the larger day 0 opportunity, peak formation for a day 3 parabolic opportunity, whether it's a session parabolic or a 3-day parabolic. So just to answer this question, yes, you can have a day 3 on any day if the setup is there, but we have a peak formation high. The low of the day forms a peak formation as we head into day 3. Our Monday. Peak formation, peak formation. They go lower prior to our U.S. window. Now, today was Bank of Japan meetings, which on a particular day like that when nothing has been released, I won't look to trade this pair. As we know, we can have intervention that will show up on the Japanese yen, which can create quite large volatility and spikes and manipulation. But the template itself was here, and we'll look at after the release of the news on the smaller time frame. But we have a lower low made in London, a market that's gone vertical in that Asian session. So again, focusing on understanding day 1, day 2, and then day 3. So looking at the larger template, Japanese yen 1 hour, day 1, day 2, day 3, Tuesday, Wednesday, Thursday, day 1, day 2, day 3 on Monday. Heading into our new week, we have a market that's pumped up in Asia, and you'll notice our levels on the way down become significant. So where they were support on the front side, now potentially resistance on day 3 on the back side. The market breaks through the low of the day, makes a lower low on the inside. We redraw our levels. Levels are where the trades take place from. This is our 5-minute chart. The New York Open occurred here, but we had Bank of Japan major meeting today, and at the beginning of the 3rd hour, we have a first bar trade opportunity right at the beginning of the 3rd hour for the day 3 trend continuation parabolic trade opportunity after Bank of Japan release for the collapse down. Now, going back to our larger template, just reinforcing day 1, day 2, day 3 on the front side. We had a market that pumped up. Day 1, day 2, day 3, high of day, high of session through the low of the week on the backside. Day 3 trading opportunity. Now, I'm going to run through these reasonably quickly, but I want to paint the picture. Day 3 on any pair in that session. So, for example, Aussie dollar. Day 1 failed breakout. Day 2 on Friday, because we broke the high of Thursday. That starts our day count in the opposite direction. Day 1, day 2, meaning Monday now is day 3. We could see a trend continuation trade on day 3. How do we know that? We're inside, and it's a dump and pump template, not a pump and dump template. Now, different volatility on the Aussie dollar. Point I'm making, though, it's a day 3 opportunity. They dump down from the U.S. session, go into consolidation on top of closing price. Higher high on the inside as we head into the new session. Set up template for the dump and pump trend trade on day 3. Day 1, day 2, day 3 continuing in the direction of the trade. So an Aussie dollar pair trading in the Aussie session. Japanese or the Asian session in blue. Day 1, day 2, day 3 continuing in the direction of the trend. Now, obviously not an explosive parabolic opportunity, but it's an easy trend trade that begins in the Asian session, continues in Europe, London, and potentially ending the move in the U.S. window. So traders who are looking to trade this because it's day 3, the opportunity was in Asia on day 3 on an Asian pair. We're looking at the euro. Thursday was day 1. Friday broke Thursday's high, and that confirmed day 1 as our Thursday low of the week failed breakout. It broke out of Wednesday's low before breaking Thursday's high, and closing as a first green day. Some traders mentioned to me, no, it wasn't a first green day. This closed above the opening price. We have our peak formation low in place, and this is an example of a day 0 setup again. A peak formation low, peak formation high, consolidation. This is a 3-day template. Day 1, day 2, day 3. Peak formation, consolidation, heading into our London window. So we have our high of day, and this is a dump and pump template on day 3 for the trend continuation. Peak formation, continuation. A low of the day, we're on a 5-minute chart here, low of the day, dump and pump daily template that closes on our longer time frame at the closing price level. So closing price is our level. They go down a bit lower before reversing and engulfing and continuing the trade. This is our 15-minute chart. You'll notice the 3-bar engulfment, but on our low of day template, they've come down into our US session longs, session 1, session 2, session 3 on a day 3 for a London cross pair, a Europe cross pair for the trend continuation on day 3 that continues in the direction of the trend in our US window. A little bit of low-hanging fruit, not a lot of meat left on the bone, but the bulk of this, again, a Europe opportunity for a European cross in the London session on day 3. Now we're just looking at oil. We had a nice pump and dump, larger time frame, 3-day template. And there's a couple things I want to point out, and this is where traders need to really pay attention to the levels and understand what type of template they're in. We've seen the lower low pump templates and dump on the indexes last week. Several traders still unaware and confused about how that works. This is the exact same template. They've broken down on the Tuesday. The closing price from Monday has held as a ceiling for the entire week, as we saw similar on the indexes with Friday's range acting as a ceiling. Monday, Tuesday, Wednesday rolled over for the collapse on day 3 on a Monday, Tuesday, Wednesday template. We see that on a Monday, Wednesday, Tuesday template, we see the lower low put in place and the pump into that peak formation level, the breakdown level, low of day level. Thursday, not entirely an inside day, but basically an inside day. They just tapped the high of the day, but you'll notice it's inside of our US session high and the closing price from Monday. They pump it up on Friday from the closing price level, a lower low on the inside, which sets us up for a day 3 parabolic collapse through the low of the week. Now, if we put our universal EMA on this is a 1-hour chart. This is prior to us heading into our New York Open. So understanding we had a failed breakout. That is confirmed once the high of day is broken on our Friday. A break of a level down low, a break of a level up high. Peak formation low, peak formation high. We are underneath closing price. The exact same setup as we saw in the indexes last week, the US indexes. We are underneath closing price. This forms a consolidation for a range expansion opportunity for that market to continue in the longer time frame trend. Pump, breakout. We've got a breakout and then the pump, 3 pumps and the collapse on Monday in our New York session. 3 sessions set up on a day 3 for a parabolic opportunity. The beginning of the 3rd hour is our engulfment. So again, timings and understanding the rotation of the hourly template. New candle engulfs the whole upper part of that broken down market. We trade through the low of day level. Now, the thesis is obviously we're coming from high of the week or high of the day closing price level back through the low of the week. This is the same setup that we saw on the indexes from the inside, the parabolic move from the inside. New York Open pumps up, beginning of the new hour for the parabolic collapse to the low of the week on oil, West Texas. The Nasdaq 100, and today is Monday, and I want to look at a couple of different examples of best trade candidates on the day in the U.S. indexes today for Nasdaq S&P, and a variation of that on the DJ30. So we have 3 days of breakout traders. We can always count backwards and get a 3-day opportunity if there's a setup there. Now we had markets that broke down on Thursday through the low of the day, the low of the week, that again blew off from the high day 1, day 2, day 3, Wednesday, Thursday, and into Friday. Friday was an inside day. Now we have 3 days of breakout traders in the market. Now this is an example of understanding the importance of timings, levels the behavior of price. I keep emphasizing to traders, I am not marking off all this crap inside trying to figure out breaks and structure and zigzags and gap times and all that other. To me, that's BS. I'm looking for the asymmetrical opportunity from the other time frame levels. So when you understand that, that's where we get high of day, low of week, high of session, low of day, low of session, high of week opportunities, where we see all unidirectional movements if you understand the timings, the levels, and the behavior of price. So these hourly templates, I had traders saying, can you please use the 15-minute charts? I don't understand the hourly charts. It's the levels and the template. The time frame has zero to do with it until I'm going to get into the trade. This helps me see the larger time frame template. We have 3 days of breakout traders in the markets. Friday is an inside day. Now I want to use a 15-minute chart because I want traders to think about something for a moment. A lot of traders are trying to get into the move right away and they don't have the right instrument or the best candidate, or they're getting lucky and then they're getting banged up on other days. But I want you to think about something, just waiting for this market to get to a level and watching it behave. So oftentimes it's a minimum, if not longer, of 15 minutes for the indexes themselves to offer a best trade candidate. Now, there are going to be parabolic opportunities on smaller time frames, but that is not necessarily geared towards every trader's skill set. So if we just take a look at this, we know this is an inside day. We have a market that traded as an inside day on Friday. The market goes parabolic on the first 15 minutes, trades through the high of the day, but more importantly, trades back to that high of day closing price level where the markets broke down from on Thursday. So when this market goes parabolic, this low on day one, our Monday, where we've traded into this ceiling, this is all inside until it breaks up top. 30 minutes with a pin through the high, and a new hour is about to begin. We've given this, so traders think that they've missed this opportunity. That's the trade. We're trading into a ceiling on an inside day. We talk about this in the playbook. Potentially, we're on a new timing cycle. We're at the end of a month. This may just be a session reversal opportunity. So several traders are all concerned about getting this move and trying to get in which way is it going to go as it's about to explode, when in reality, you don't even want to look until this market gets to a level. It is not at a level. This is the fugazi that I'm talking about. I don't care what anybody says. They think they can read all this. That's great, but this is still 50-50. When we get out here, now we have other time frame traders involved in this market. And we know who's been driving this market. But this may be over. But this is still a large opportunity on the day itself at the levels. New York has put a low in place on the open. They go up to the high of the day, the high of the last 3 days, and the closing price level. 1, 2, 3. Pin hammer. New hour starting for the collapse from the level back down to the low of the session. And for all intensive purposes, pretty much the low of the day. And we'll just go back and look at one other thing in a moment, but you'll notice then that the market locked in that low, then traded higher, made a higher high later in the day. Higher high on the inside is the template for a dump and pump off of the level that was made in the New York window. So think about this. U.S. index. This is not fugazi. Once it's trading, once New York is opened, this is real. This is real at the level. This level is now real. The rest, they make up for you to chase during the day. So if we just go back and look at the U.S. levels from the last 3 days, New York put the high in on Thursday and the low in on Thursday. They were inside. They were inside on Friday. New York opens today, and where it sold off on Thursday is potentially a level where they could sell off today. Levels, timings, behavior of price. An excellent reversal trade taken by several traders today. So I'm just reinforcing that Yes, there are opportunities for parabolic moves from the inside. And there are going to be days, this is day one. So we could be on a day 3 and traders are going to look to counter trend this, and it could be a trend trade and it could go on a measured move. So you need to understand the templates, the levels, the timings, and the behavior of price. This was a fantastic opportunity today on a Monday. 3 days of breakout traders in the market at the timing window from the levels for a very successful reversal opportunity, third hour. Nasdaq 100. We'll just close here on the S&P. You can go back and look through your other charts, but understand Asia, London, New York, day 3 and the third session on day 3 for those pairs. Day 1, day 2, day 3 can offer session parabolics or a 3-day parabolic over a larger template. Now we're Friday, Monday, looking at the S&P 500. We have 3 days of breakout traders in the market heading into our Monday. So coming back to understanding templates and day counts, because yes, it is real. It happens every week. And the better you get at this, the better your opportunities will be. So somebody asked me, why did I use closing price from Thursday? Because Friday was a failed breakout. When I came to the screen at the U.S. session window, when New York was about to open, this market has come back inside. Day 1, day 2, day 3. We are on top of that level. So ask yourself this question. If you were short at closing price level, just hypothetically on Friday, you were in the money. When we come into today's New York session, are you still in the money as that market's about to open? No, you are not. Where is the money? Now, just looking at our U.S. session highs and lows, U.S. session highs and lows, where is this market really traded? It's really traded in the U.S. window. Again, this is my opinion. Don't care what anybody thinks. This is how I trade. Off the levels, in the timing window. One of the other questions I got asked was, why did I have 50% level on there? Because 50% of the high-low may have given me some information. If this is where the money is from the U.S. session on Friday, and they're going parabolic, I want to be above 50%, which is often similar to where the closing price level may be on a day 3. We have our 5-minute chart here. So as we headed into our 9:30 New York Open, we were already parabolic on our 5-minute chart. We can put our universal EMA on there. And the thesis is they're going after the money. They're going after the money. So closing price down here has been acting as a level of support. We have what Al Brooks would call a bull candle reversal explosion engulfment. They're not letting anybody out of this market who's short underneath of Thursday's closing price. The market goes parabolic to the high of the U.S. session. Same behavior as the Nasdaq. 1, 2, 3 sideways. Third hour reversal. Pin hammer from the high of the day, the high of the U.S. session, for the collapse back through the low of the session. Now coming back to our 9:30 candle, that opening price level later became a level of support, but the overall low of the session, if we just back this up, we have a breakout level that was on top of 50% before continuing higher high for the dump and pump template, day 1 beginning the potential reversal for a day 1, day 2, day 3, which Monday, Tuesday, Wednesday may be an opportunity either for a trend trade on day 3 or a reversal trade on day 3. And if we back this template up at last week, so understanding Friday is the closing range of the week. We broke out on our Monday and we made a lower low. Look at this candle at the New York Open on the previous Monday. Pin hammer. That is a pump candle. Day 1. Day 2, day 3, underneath of the closing price. We went over this on the other pairs. On Nasdaq, DJ30 was different behavior, but day 1, day 2, day 3 breaks down and reverses, just like oil today. 3 days of breakout traders in the market, a great session opportunity in both directions for traders who were looking for either trade today. But we have day 1, day 2, day 3. We have a higher high, day 1 breakout traders in the market on our Monday. And that confirms now that Friday was a failed breakout, day 1. Today is day 2. We may have an opportunity tomorrow on the S&P for a day 3 opportunity. Don't know. We will know when we get there whether or not there's a best trade candidate or an opportunity for a session trade on Tuesday, if it's not an inside day. So day 1, day 2, day 3, timings, levels, behavior of price, master those setups, traders. It's levels. All the gobbledygook and everything else, that's great if you want to try and master all the little price action swings and everything else. I'm interested in asymmetrical risk reward. These are 100, 150, and on big trades, 300 pip moves. 300 pip moves. There are going to be parabolic opportunities for 25 pips of easy free cash that you can load the boat on because it's a day 3 trade and it's blowing off. It may be a lower volatility instrument, but if you master these setups, you can compound your account super fast, controlling your risk, understand the setups, not trying to zigzag every little move in a market and catch a move and be on a 1-minute chart. I'll go to the 1-minute chart when I'm at the high or low of the day at these levels. That is it. Other than that, not necessary. Timings, levels, behavior of price. Master your emotions. Don't be impulsive. Step back. Look at the larger templates. Have a basket that reflects the opportunities that are going to show up over the course of 5 days. Don't be chasing things. Don't get caught on the inside. Things on the inside are 50-50. On a day 3, we can have a move that goes parabolic from the inside, but it will have all time frames lined up. I repeat, a parabolic opportunity on day 3 will have all time frames lined up. Understand that. Keep it simple, traders. Master these trades. They come repeatedly. Rinse and repeat. Scale them up in size. Have a great day, and may the markets go with you.